Welcome, everybody. SF Live episode number 93 today. My name is Kai Hoffman. I'm the CEO of the Soar Financial Group. I hope everybody's having a great start to the week. I'll be joined in a few seconds by Tsukernik, and I'm really working on pronouncing his last name properly. It's important to me in a few seconds, so bear with us. Just got to do a quick reminder that please use hashtag AskNOVR. That's the company's ticker on the Toronto Stock Exchange for your questions during this live chat. This session is for you, the investor, and to get your questions make this a much more lively and much more interactive format than it already is, I hope. Also, follow us on Twitter, follow us on YouTube, hit the alert and subscribe button. That way you get notified when we go live with another interview. Also, very quick reminder, we're hosting the Deutsche Goldmesse of the German Gold Show next week, Thursday and Friday, November 5th and 6th, online, unfortunately, so make sure to sign up. We got an excellent roster of keynote speakers and companies presenting. Make sure you use that opportunity to engage with the companies and get some good insights on the gold market in general, and get your updates there as well. But that's it from this end. Let's switch over to Mr. Alex Tsukernik, President and CEO of Nova Royalty. Alex, excited to have you on the program. How are you doing? How are things?
Doing great. Thanks for having me.
No, it's great to have you on. And it's a bit of a different company today, completely different animal. And it's struggling a bit with questions at first because you're a copper-based metals royalty company. Not like everybody else. Like there's like 70 other royalty companies in the precious metals space, but you're a new company. You've only recently came to trade as well. So run us through the company first. The first 30, 60 seconds. Give us an update. Who are you guys?
Well, look, thanks for having me here. We were founded 2 years ago. And it was really on a very simple idea. What we saw happening with electrification was something where the world wanted to live differently. The environment was much more important. Health was much more important. And one of the primary ways in which people wanted to do that was to go through electric energy rather than fossil fuels, which is oil, coal. And when we looked at the supply chain, we saw that the two commodities that were really most prevalent in that phenomenon were copper and nickel. Copper is essentially your entire infrastructure, from wind energy, solar energy, the EV itself, EV charging stations, and nickel is the dominant element in the cathode in the electric vehicle. So once we saw what those two commodities accounted for, the rest of them really didn't have that prevalent of a role in the whole process, and so we thought it made a lot of sense to create a royalty company focused on the next generation of copper and nickel mines you're going to need in order to create this world. And that's what we've done so far.
Fantastic. And run us through a bit through the history of the company. It's not an IPO, it was more of an RTO through an existing company. And I think you've been involved in Battery One, that was a predecessor company as well. Run us through the process there and tell us a bit more about the history and like why are you an expert in the field as well?
Sure. So maybe a little bit about myself first. I've been in metals and mining finance now for over 15 years in every capacity: investment banker, investor, advisor. And what really excited me, I think, over the years was to create a vehicle that I was really excited about. And kind of having worked for myself for a long time, I got a chance to see a lot of different things. And then I met Brad Heath, who is the founder of Metalla Royalty and Streaming, kind of a bunch of years before, and we stayed in touch. And I saw how successful he became with putting together Metalla on the precious side. And we both grew pretty bullish on what was happening with electrification. I remember I was in Lima, I believe it was 2016, and I was at a conference. And somebody from the Chinese government got up on the stage and said, these are the metals we wanted 2009, 2010, which was coal, iron, sort of the usual steelmaking inputs. And then he said, these are the metals we want now. And this was copper, nickel, lithium. And it became clear to me at that point that when the Chinese government, which was probably one of the greater polluters before, was making such strong steps in terms of clean energy, that this is something that would become mainstream for everyone. And so we kept on talking, and then we put together the company in the really spring summer 2018 and got a great team to join us. Our first acquisition was in the Dumont nickel project in Quebec, which is the second largest nickel deposit and nickel reserve in the world. And we did a $2.6 million financing in January 2019 to enable that. And that was the unit at 25 cents and the half a warrant at 40 cents. And then we really spent the rest of 2019 refining the process for what we wanted to do with the company. And it became clear to us that if you want to be successful as a royalty company in these capital intensive businesses, you need to find a way to get royalties on really the largest assets that will be developed by the big companies. Now, obviously, we cannot transact at this stage directly with a Tech or a Newmont, but what we can do is acquire the existing royalties on these deposits from individuals who may have them from prior transactions and who need some liquidity, either cash or shares, in order to enable their life plans. And so if you look at the deals we've done, whether it's Dumont, whether it's Nueva Union, Takataka, or Janice Lake, it's with parties who have royalties on exceptional deposits, who have some sort of funding slash liquidity needs, and because we are sort of a focused vehicle that's not public on the TSXV, it's a natural match.
No, that makes a lot of sense. And you mentioned a couple of things I want to dive in deeper on, obviously, like A is acquiring bigger royalties, but I also want to talk about the royalties you already have and then also the cap structure, right?
Of course.
Trying to think, so like I think it makes sense. Let's start with the share structure first. It's always the first thing I look at as well when I open a presentation. After management, I look at the share structure. With Brett Heath, you have a renowned royalty expert on the team. So, but also share structure. You got 58 million shares outstanding, fully diluted right now, giving you a market cap $63 million. But also you got 14 million warrants with an average strike of 60 cents. And just one of my questions is like, who owns those warrants? You mentioned the financing from 2019. Give us a little more detail there. Like, who are the shareholders, and do we have to be worried about the shares coming into market?
No, look, it's the right question to ask. We were very lucky when we did our first financing round in 2019. Roughly half of that came from three people. That was Doug Casey, Paul Stevens, and Adrian Day. And so these are people who understand the industry and want to support the company. And so kind of a lot of those warrants came in that round at 40 cents. And these are people that we believe are going to be holders and supporters of the company going forward. And so those warrants, they all come due by March 2021. And then the second big slug of warrants was issued in our financing back this February, and they're struck at $1, and that's when we acquired the royalty on Nueva Union. So we got excellent support in that financing when we did it. We raised the money in about 3 weeks, just shy of $6 million. BD Capital, which just gave us a $15 million financing facility, was one of the investors in that round. So we've been really lucky in the sense that we've gotten really good, strong people into the company. And while those warrants are obviously there's not a lot of shares coming out right now because I think we get some pretty good support from our shareholder base.
Fantastic. And a couple of things as well. You get some debt, and you just mentioned the $15 million financing with BD Capital as well. Run us through the convertible debt and the terms real quick. What's working capital looking like right now?
So we right now have just over $5 million of cash on the balance sheet.
That's Canadian or US? Sorry.
Canadian. All Canadian. So, and then BD Capital, we drew down a $3.5 million convertible. That was the first tranche of a facility. So we have a facility for up to $13 million. And then the first tranche of that was $3.5 million with a conversion price of $1. Now, that can be converted. Basically, 50% of that can be converted when the share price gets to 150, and then the other 50% when the share price gets to $2. So, they're here to support the company. It was very friendly terms for us, and then they also committed to put up $2 million in the first equity financing that we do this year. So it's great when you have a big shareholder who's willing to provide that capital to the company at an early stage. So really pretty much all the money we've taken in so far, Kai, has really been from people who see what we're trying to do.
Fantastic. Run us through the largest shareholders real quick, and then we get off the topic of share structure and capital structure.
No, look, I'm always happy to talk about that because I think that's the essence of what the company is. The largest shareholders are going to be BD, Paul Stevens, Adrian Day, and management. I mean, we own over 20% of the company ourselves. So we've got a lot of skin in the game. We put this thing together because we thought that there was no one really focused on this at that point in time, and we saw an essential need. So this is something that we feel very strongly and excited about.
Fantastic. Let's talk about the projects as well, and I really want to get more of a handle of like why is a $63 million market cap, like in your opinion, still undervalued in terms of maybe peers, and get a sense for it. Maybe we'll start with the assets. Run us through your four main assets, and also when do you expect to produce cash flow, and where are you generating shareholder value?
Of course. Yeah, look, I mean, whenever you build a royalty company, I think it's very important where you start in terms of sequencing the value build. So we started really from scratch. That's we thought that was the simplest thing to do. And where we saw the greatest chance to build value in the beginning was by acquiring royalties on these really large premier development assets that were some ways from production. And the reason we wanted to do that is because when you look at the history of mining, it's those assets which actually hold value the best, and those assets which generate those exponential returns. Because once you have this big geological system and a big company is in charge, it gets bigger for a long time before it ever gets smaller. And so if you look at the copper industry today, it was built in the 19th century,
Yeah.
not 20th, 19th. So the thing is so a big copper mine is like nothing else in this sector. There's literally nothing like it. So what we felt was most exciting was let's go buy royalties on these deposits of the future today at values that we think are really compelling. And I think so when I look at the so-called net asset value of the portfolio, even if we just take whatever is in the technical reports today, we're still at a discount to that,
Yeah.
at a time when the industry is trading at much higher multiples. And then that excludes all the production expansions and exploration that's going to come here as well.
Okay, let's focus in on the projects as well, and I want to talk more evaluation on the
Sure.
of the company, because you like to compare yourself to the precious metals companies, royalty companies. It's difficult to set up a peer group with no other base metal royalty companies in the space, right?
Yes.
So who do you compare yourself to? When I was going through your presentation, and I kind of was like, I stopped and I thought about one thing. Like you said, like why should a base metal royalty company be valued at the same as a precious metal royalty company? And my thinking is like capex wise, usually those base metals projects are way more capex intensive to get going. Once they're running, as you said, they're getting bigger usually, and those are long life assets. But the initial capex is usually quite high. So I'm assuming getting a royalty on a small part of it is more expensive as well. So tell me more about that.
Well, the thing is, I mean, look, base metals are definitely much more capital intensive. But one thing you also see is that the top base metal mines are much more scarce and valuable than anything in precious metals. And if you can get royalties on those types of assets, it's really the oceanfront properties of our industry. So whenever you can get them, you should. So I think from just a pure mine quality and value perspective, it's really an unmatched proposition. I think even the precious metals royalty companies have acknowledged as much in some of their public statements. Now, from the perspective of what things should trade at, the reason we started this company was because for the first time we saw a trend macroeconomically that was at least as strong as what was happening in gold. The gold bugs have provided a wonderful base of investors for the precious metals royalty companies, and I don't know of any coal bugs or iron bugs or potash bugs, but there's definitely a lot of people who I think feel very strongly about what's happening with clean energy right now, and I think that number is multiplying by the day. So we are the company through which you can invest in the most critical materials in that supply chain through a royalty structure. And nothing like that has really come to the market before. And I think the timing for that is also very good because you're filling, I think, a very strong need that's in line with where the world is going. So as far as valuation multiples, look, the market decides that, not us. But what we can do, I think, is explain why this is important, and it's particularly important today.
Yeah, no, that makes sense. And let's dive deeper into the assets. You get great operating partners there, and Teck, Newmont, First Quantum, Waterton, but also Rio Tinto own the assets that you have royalties on. How'd you acquire the assets or the royalties on them, and run us also through the catalyst there. That's part B, by the way.
Absolutely. So look, it's interesting. We can literally start from the beginning. When we bought the Dumont royalty, that was two gentlemen who were getting up there in age and wanted to do some estate planning. So we structured a transaction where we bought the royalty for $3 million in value at that point, $2 million in cash and $1 million in stock. And they believed that we could do something with the company and I think their faith has been well rewarded. I believe their stock position at this point is something around $10 million. So, but really, I think that's the prototypical type of counterparty for us in terms of people who want to do something with the royalty on a quality asset, which is still good waste from production. Now, then the second major transaction we did, we picked up the royalty on Nueva Union, which is a tech asset, Tech Newmont. This is one of the premier copper development projects on the planet. I mean, what's great about it, Kai, is we announced the acquisition on February 18th of this year. 2 days after, Newmont and Teck announced a drilling program of $152 million on the property. So it's only been
Yeah.
it's been drilled to about, I guess, 500-600 meters to date, but the deposit is like one big pipe going straight down. So things like that can go way deeper. We'll see how far they get. But this is why you buy the royalties on these things, is because you have really the most capable, well-respected companies in the world exploring and putting in capital, and that increases the value of your position. So that's the best place you can be. And then later this year, we Janus Lake. Rio Tinto is exploring that right now in Saskatchewan. I mean, you just don't see many opportunities of that nature when you have a major company which is very interested in copper, and they found right now the trend is, I think, mineralization is already 8 kilometers, and the district is to 52 kilometers, and Rio seems to be going at it, in a very very proactive way. We got the royalty from a prospect generator called Transition Metals, and we struck a deal with them earlier this fall. And I think it's really a win-win type of transaction, because prospect generators, they're very good at going out, getting ground, pegging the right places, but at the same time, you're also spending money. You don't necessarily have any liquidity or sales to kind of show for what you're doing. So what we did in our case is we bought half the royalty. So we bought half of the royalty position. They kept the other half so they can keep some of the upside. At the same time, they got some cash and shares from us, which allows them to get a valuable liquidity event and also get some upside to what Nova is doing. So we really like those deals because it's really, I think, creates an essential function for both parties. And then the last one is Takataka, which we just announced recently. And look, that's one of the premier copper development projects in the world. I mean, it's already over 3 billion tons of resource and growing. This was, I believe, one of, if not the largest project in Lumina Copper when Ross Beatty had it. So you just don't see a lot of opportunities like that. It's right across the border from Antofagasta, 90 kilometers from Escondida. You have everything you need: infrastructure, water, power, and the like. So Salta is probably one of the best, if not the best place in Argentina for the mining industry. So and then the sellers there, similar situation, private individuals who wanted to get some liquidity. But what was also nice is they also took 20% of the deal in shares of Nova. So I think it shows their faith in the company and what we're doing. And in Latin America, that's actually not that common, where people take shares in North American companies. They're generally very leery of sort of the stock markets here. But in this case, it worked out, so we're happy with that.
Fantastic. Okay, now run us also through some catalysts that you're expecting to come from these assets. You mentioned the drill program on Nueva Union. Like where's the value now coming from? And value for a royalty company for me comes cash flow, right? So what's the timeline to cash flow? And also and we got a question in here on Twitter as well, and I'm just going to ask it actually right now because it fits the narrative. And it's from Oswaldo here on Twitter, and he's near-term plans for cash flow, and do you have any cash flowing assets already currently? So future cash flow, current cash flow, plans.
Absolutely. Look, we're definitely no strangers to the question. Look, I think let me step back for a second. It's all about a sequence of value. So we've created a lot of value by buying royalties on some of the best mines kind of this industry will see. Now, in terms of when they'll be cash flowing, I think the expectation is that these mines will probably start ramping up toward production after 2025, between 2025 and 2030. Now, once they get into production, they will probably outlive our children, given how long they're going to operate. But in terms of, I guess, first cash flow, I'd probably say somewhere between 2025 2030 is reasonable to expect. What we would also like to do, and we are very much at work doing that, is acquire royalties on some cash flowing assets or near-term cash flowing assets. And given the types of asset base that we have, it's something that's actually, I think, quite attractive for people who have shorter term assets, who are kind of who are cash flowing but don't quite have the same long tail and size that we have in our portfolio. So it's just a matter of sequencing it and building it correctly step by step. But of course, listen, we will be cash flowing, and we're very focused on that part.
Fantastic. All right. Any like okay, you sort of hinted at it. Like what's in the pipeline moving forward? You got 13 royalty companies. What's your business plan? Where do you want to take it? Like how many royalties do you want to own? And is there a strategy behind there? Obviously, but
yeah, look, I mean, we spent, before we went public, Kai, we spent a good amount of time really mapping out the entire sector, to the point of where you're thinking about every rock of copper nickel in the world, because it's your job to find a way to own it. Now, what we want to be is for the best way for any investor anywhere to own copper and nickel, which are the two essential metals of electrification. So it creates, and because we're the first ones, I think, right now who are really looking to consolidate this space. Look, there's a lot of really good opportunities ahead of us, and I think what's great right now is that people really see now what the company is trying to do. When we were a little bit younger and you're still sort of very new and people don't know what you can do, you still don't have a big portfolio. It's one thing, but I think now, kind of when you look at some of the world-class assets already in the portfolio, we're backed by some strong people. I think it creates tremendous momentum behind the company, and so we're really excited about the next steps here, because I think we have a chance to really create a company of substantial size.
Yeah. Which one of the big four do you think is going to be the first one to produce cash flow?
I think the more, it's a good question. As funny as that is, it could be any one of the four. And I'll tell you why. Because these are very large projects, and they move whenever their owners really decide to press on the gas. That's just the way that it goes. This isn't a mine you sort of keep ticking along a little bit, because you got to put in, you got to put in real capital. Now you see kind of there's a big deficit coming in both copper and nickel, that's going to become apparent here in the coming years. That's maybe one of the reasons why you are seeing some prices running, but I don't think people have figured out yet just how much copper you're going to need, how much nickel you're going to need. I mean, just for EVs themselves, you're going to need 4 million tons a year of new copper just for the EV sector. So the copper market right now produces 25 million tons a year. You're going to need almost 20% of that incrementally every year just for the EV sector. And that's based on relatively conservative projections. Forget about wind and solar and everything else that you're doing. So I think once the world begins to really wrap its head around how much copper you're going to need, and mind you, copper supply has been growing globally by about 1% a year for the last 5 years. 1%. You're going to need to ramp that up a lot. So and then nickel, I mean, you're talking about just a complete change, because the amount of automotive grade nickel you're going to need is supposed to go up about 20x between 2018 and 2030. So you have fundamentally different industries being born, and we have, I think, the critical pieces to that growth. So we're super comfortable with those deposits and kind of their ability to get into production and also throw off legitimate cash flows. In fact, I'm much more comfortable with those deposits than smaller mines that are hypothetically closer to production but don't have nearly the same strategic imperative. Because I mean, the reasons mines succeed is because the owners need them to succeed. It's a very, very, very hard business. So, even Janus Lake, what's amazing is, it's the earliest stage by far, no question. However, if you look at what Rio is doing in Australia, they have a new discovery called Winu or Wainu, whichever way you pronounce it. And it's over in the Patterson province. It's only a couple of years old, and they're already putting the mine into production. It's copper gold. And the thing is, they're so keen on copper, and especially in the right jurisdictions, that they'll put even a small discovery into production because that's something that's of value to them. Now, Janus Lake is not quite there yet, but depending on how it goes, it's one of those things you can't discount. So I think, we don't have an expectation which one will go first. I mean, we like all these deals in their own way, and we're just focused on growing the portfolio in the right way going forward.
Fantastic. Alex, we're out of time. So last 30 seconds, just run us through near-term news flow catalysts for the company, maybe next 3 months. What do you expect to happen?
Well, listen, I mean, we went public because we were ready to grow the company in a really proactive way. So, we can't promise anything, but we hope to be back with more news. And we would love to meet as many people as we can on this process.
Fantastic. Alex, thank you so much for joining us. Really appreciate it. All the best to you. You're based in New York, if I'm not mistaken. And
I am,
we,
yes.
we, we should catch up in a few months, see where things are and how the copper nickel market is doing in general. Didn't even get to talk about ESG and all that stuff, so we're going to do that next time. But in the meantime, good luck and thanks for joining us. Everybody else, thanks for tuning in. Thanks for watching. This was SF Live, episode number 93. And Alex Tsukernik of Nova Royalty joined us for this session. Thank you so much. And we'll stay tuned and we'll be back soon.
All right. Thanks, Kai. Much appreciated.